Good afternoon, everyone. It's the 16th of January 2023, and today's webinar, it's about Quasimodo, actually. So, Quasimodo pattern. Okay, so this is what we're going to be talking about today, which is basically this pattern that you can see in here, that I already draw in here in green. Like it's quite similar to the head and shoulder, which is the most traditional one. It's a reversal pattern usually, and if you actually pay attention to it, or after you actually start recognize it and learn about it, you are going to see it everywhere, absolutely everywhere in the charts. You are going to see this specific pattern. It can be in a bigger picture, smaller picture, can be on the right side, on the left side, every single place in market, you're going to find it. So how do you trade it? How do you usually trade it? The most basic way to look at it, it will be to find. So we have a left shoulder, right? We have a high. We have a retracement from that high. We create a higher high, the head, right? The head of the head and shoulders. This, in this case, is the fake out. We can actually call it fake out in here. So let's just call it what it is. Give me a second. Shift T. Okay. So this one is the fake out. Okay, great. Caps. Fake out. FO. This one is the left shoulder. And this one, of course, is going to be the right shoulder, right? And this is going to be in eventually the lower low created after price breaks this low. This is just a low. I think in theory, you are going to have something like this happening. And this is the Quasimodo pattern. And in theory, if you have a Quasimodo pattern, when price approach the right shoulder, which is a little bit in alignment, usually it's in alignment in the same horizontal line as the left shoulder, in theory, you should be selling in here and expecting price to go to the downside, right? So this is in theory what you should be looking for. This is in this case short opportunity. You can kind of flip it, and it's going to be a long opportunity, right? Something like this, and from here you kind of can attempt to look for longs. And this is one of the most common patterns that you can see as reversal, and you can find it absolutely everywhere. And this is how price moves, right? You have a high, you have a low, you have a higher high, so in theory price goes up, but when eventually you see this low being broken, in theory it's a shift in the trend, and you're going to have kind of the beginning of people are going that were kind of bullish. Now they're kind of bearish because you just broke a new low. So we have a new low, and this is a normal zone to look for a sell. Kind of on the retest of the high, there's maybe an opportunity as well to look for a sell just straight after the break of this low, kind of as a breakout setup, retest that and go down. So that could be an option. Now, if you are about to trade Quasimodos just based on this, most of them, they may fail. And therefore, what we're going to be doing today is to go deep into it, right? We're going to pay attention to details, because all this is about details in order to find out clues, in order to try to predict exactly which ones actually work, or when should be expecting this pattern to actually not work, and actually to basically work on the opposite side. In this case, it will be instead of looking for price to actually maybe around this area to sell, or to be as a sell opportunity, there's a chance that price actually can not go down from here, but eventually kind of move it a little bit like this, actually break the high, and eventually use the same line that initially we're looking for a sell, use exactly around the same level, and now we are actually looking for a long. So the same level, instead of working as a sell in the future, if this zone is not respected, and after you're breaking the high, there's a high probability that it's going to be worked as a long. And in this case, we call it, just as a normal name, we're going to call it IKM. Kind of, it's the inverse inversed Quasimodo, right? We call it IQM. Go back to IQM. This is the inversed Quasimodo, which is instead of looking for a sell, instead of being respected as a sell, it's actually going to be respected as a long. Now, what clues can we try to find out, or what would be some clues that we could try to find that will tell us if this zone is actually a good level to look for a sell, or should we actually maybe wait for it to be broken and now actually look for a long? Do you guys have any idea what clues should we pay attention to? It's going to be interactive, guys, so feel free to participate.
The break of the low.
This low here?
Yeah. No, the first one.
Ah, the break of this one?
Yeah.
Yeah. No, let's pretend that price is actually in here. Okay. So in this case, actually the lower low, this low actually occurred. So we have a lower low in here, and price is in here at this point, right? So price is in here. So what clues can we try to find out to see if actually this zone is going to be respected or not, and if you should be looking for sales in here or not?
A decrease in momentum.
Could be. That's about the approach. So let's actually keep writing stuff. Yeah. So looking at the approach, yes. Approach.
I would look at divergence.
Fair enough. Divergence. Divergence on the RSI or divergence on like
where you can find it. Something can find it with an indicator. Sometimes you can even find it on the price itself.
in the indicator, right? Indicators, great. But that's still approach, right? So you are talking about, are you talking about in this case of just how price is approaching this level, or even looking at all the bigger picture in terms of the divergence? Maybe bigger picture could be.
I think you can look at the bigger picture on price itself.
Yeah, could be. Yeah, what else? Anything else? And what you mentioned approach, what in terms of the approach, what do you mean? Like losing momentum, what else?
Some specific candles like doji.
Okay, if you start printing dojis around here. All right. If you start seeing the my famous compression, right? Eventually, maybe you can draw some kind of trend line and breaks it, and maybe feel free to go down. That could be good. Yeah, but in this case, yes, in this case, basically, we are talking about how price is going from this lower low all the way to the right shoulder, right? How price is moving in here, right? Doing this trajectory. What else? What else can we find out?
We can look at the volume as well to see a decrease in the volume approaching the right shoulder.
Enough volume. All right. What else? So decrease in volume, or if it was an increase in volume, so when you created a lower low, maybe that can be. Yeah.
I would say you should look at high time frame support resistance, where price come from. The whole idea. That's the idea of it, no?
Thank you. There you go. Right. So exactly. So what key levels do we want to find out in here? Thank you, Ari. It's exactly that. So where is this low reacting from? Where is this high reacting from? Right. So this is going to give you a lot of the clues or a lot of information based on, are we looking for this one to be respected and price to go down, or by any chance this is actually kind of a continuation to the upside, and it's not a time to even look for a sell, right? For example, a way for this not to work is, imagine that this lower low is actually reacting from an important level of support or a demand level, right? And let's pretend that this high, actually this fake out, it actually broke a level in here, right? Let's pretend that it broke a high that it was just from here, right? So this in reality is kind of the opposite. Is the break of this high is actually still showing that price. Just change another color, can be white. In reality, this high in here is actually showing that price still wants to go higher, and this low is actually respecting an important level. So there's no break in here. There's no engulf to the downside. Price actually respects a good level. It's totally okay to break this low. This low, in this case, it doesn't mean a shift in the trend. It just means that this low, in theory, most likely didn't really reach the final destination as it should, which was this demand. Therefore, this fake out is okay, and price can actually go and continue to the upside. We just had a similar move like this, for example, on pound during the news. We have a break of a structure in there of that high that I mentioned. The compression, we have a low that didn't react to anything, and we actually have the demand zone, the fresh level that was a little bit underneath this low. So this low, this lower low that is created, it actually respects this level. So there's no engulf down in reality. This level in here shouldn't be actually be looked for a sell. Quite the opposite. We actually should be waiting for this to be broken to the upside. This can actually maybe create some kind of demand in here, and I break it, and then maybe can go and retest this level, or just kind of retest this previous high, and maybe we can go high. So yes, paying attention to where the high and the lower low are reacting from on the left side. So yeah, that's the exact question. Where is price coming from, and where does he want to go? This alone is going to answer a lot of your questions, because yes, when you see this movement, or when you see just price like this doesn't really mean anything. Sometimes it's actually maybe just a confusing way. You have no idea at this point if price wants to go higher or if it wants to go lower. I think, which pair was just like similar to this? Was it gold? I think it was gold. Gold, it was a similar situation as well. It was still in the bullish momentum. It created some kind of pattern like this. And usually, actually, let's reply more. On the other hand, if this is actually to work out as a sell, let's actually just do the opposite. Is, for example, maybe, yes, price now reacted from this high, the fake out actually reacted now from the supply level, from the important, maybe a level of previous support that maybe become resistance. This left shoulder didn't really reacted from that level. We have a new low in here, price touched that. Now we have a lower low. Let's pretend that maybe price actually was making something like this. Actually, it kind of went down, and this is the previous low. So actually, price broke not even just one low, maybe even another low. And yeah, this is a clear engulf down. And in this case, yes, in this case, this is a beautiful level in the future to look for a sell, to look for a price now to continue to move down, because this now is a clear break of structure of something on the left side. And this becomes one of my favorite patterns that you can trade. And if, as you know, you have seen so many times happening, this setup. Okay, it can be even indices, can be crypto. Crypto is amazing with this setup as well, and FX, all assets, you'll find this pattern happening. And yes, at this point, this is where I will start pay attention to this. So if I do have the high reacting from a good level, if I do have the low breaking some important zones on the left side, the next clue, it will be definitely how price is approaching this left shoulder, right? To find out actually if that's the right moment to look for the entry, and wait for my confirmation until I actually see now price kind of shifting from this bullish retracement a little bit until the right shoulder, and then move to the downside.